Why does the stock market care so much about a rate cut? Just weeks after worries about an AI-driven market bubble caused stocks to stumble, the market is once again approaching record highs. The main reason, the Federal Reserve. Stocks have climbed back from their early November dip as investors increasingly expect the Fed to cut interest rates at its final policy meeting of the year. Lower interest rates can lift the market by reducing savings rates and borrowing costs for households and businesses. That tends to stimulate spending and investment, boost economic activity, and ultimately support corporate earnings. Rate cuts also push down yields on short-term government bonds and cash-like assets such as money market funds, making stocks more appealing in comparison. In short, falling rates can create a powerful tailwind for equities. Jonathan Krinsky, chief market technician at BTIG, noted Monday that the latest rally has closely tracked rising odds of a December Fed rate cut. As of Monday, traders were pricing in an 89% chance of a cut, according to CME FedWatch. Markets have essentially reversed all of November's weakness, Krinsky wrote. That shift has moved almost in lockstep with expectations for a December rate cut. Why lower rates help stocks? The Fed is moving toward cuts due to signs of a cooling labor market. For investors, however, lower borrowing costs provide more momentum for stocks. Because the Fed's benchmark rate influences interest costs throughout the economy, a cut can immediately reduce financing expenses for many companies. The Russell 2000 index of smaller, more rate-sensitive firms hit a record high on December 4. When you look at smaller and more vulnerable companies, like those in the Russell 2000, lower rates sharply reduce their interest expenses and expand their profit margins, said Jose Torres, senior economist at Interactive Brokers. That's why sectors such as real estate, manufacturing, and small businesses benefit so much from easing. Still, while investors are confident about this week's cut, Wall Street is already looking ahead and the outlook for early 2026 is less certain. On Wednesday, the Fed will release its quarterly economic projections, outlining officials' expectations for interest rates in the months ahead. As the Fed considers further rate cuts this week and into 2026, any renewed acceleration in inflation would likely force a slower and more cautious approach, said Jason Pride, Chief of Investment Strategy and Research at Glen Mead.